You wanted to make money, is what you're saying. Is that why you got into real estate?
Yeah, it's kind of important to be able to live,
pay your bills,
shelter, wanted to eventually get married and have a family.
Sure.
So, yeah, you need all that stuff.
Welcome to the Old Fashioned Real Estate Show, where hosts Brian Leverage and Jeffrey Holst pour our old-fashioned real estate advice.
Episode 32.
Welcome to the Old Fashioned Real Estate Show. My name is Jeffrey Holst, and this is
Brian Leverage.
Good. You know your name. I like it. All right.
For now.
Today we're going to talk about, what are we talking about?
How we got into real estate investing.
Yeah. That's good because we prepared no notes.
Yeah.
And so it's a topic that we actually know the answer to, so that helps.
Right? So it's, fake it till you make it sort of thing.
Well, I'm not faking it. I actually am in real estate investing.
No.
Just in case you guys are wondering.
So.
I don't do note investing.
Right. Jesus. I digress. So, like many other real estate investors, I don't think either of us started out on that career track necessarily, right out of college.
That's right. You worked in a rental car agency.
I did. America's largest rental car company, too.
Is that Enterprise?
I can't disclose that.
It is Enterprise. They can look it up. It's on the internet. It's Google. They just look. So, and of course, I started as a lawyer. So I have a master's in business and a law degree, and I practiced law for a while. So that's where we started. But then, the topic isn't like how to rent a car or, how to hire a bankruptcy attorney. It's really about, real estate. So how did you get started in real estate? Like, what appealed to you about real estate in the first place?
It was a couple things. So my background after my brief tour in corporate America was in construction. I've been in construction for about 25 years as a general contractor, a builder, etc. And so it's kind of always been in my blood. And so real estate is very long lasting generally, right? You build it, whether it's a house or a building of some sort, like it's going to be there a really long time, more than likely.
And you talked about this, I think, in the first episode that we did.
Yeah.
Well, the second episode where I interviewed you about your background. You said one of the things that attracted you to real estate was that you could leave a mark, sort of, that would last beyond you, right? It was like a quest for pseudo immortality. I don't think you called it quite that, but that was essentially what you were saying.
That would be a little egotistical. It actually happens that I did study real estate planning and development in college, although I'm 4 units shy of that degree, in full disclosure. But
what is your degree in?
Well, as I just said,
you don't have a degree at all?
Not at all.
So you're
I wear a degree
and
antiperspirant. That's about it. So
Brian is like Bill Gates.
He did not drop out. No, I didn't drop out. He did. I didn't.
Oh, you didn't? You just didn't finish?
Correct.
That's the same thing. So all this time, I thought I was partnering with someone who had a college degree. I'm now going to have to reevaluate my priorities.
Yep. So, but it also wasn't lost on me that more fortunes are made in real estate than in any other asset class, I believe.
Yeah, the camera's over there.
Yeah.
Okay.
I was looking at that one. Okay. I was looking at the camera case.
Yeah, I just thought I'd share with you.
Yeah. Or I was going to see if I could make another bank shot.
That was a previous episode. That's going to confuse people.
Yeah, right.
So, yeah.
That'll air right before this one.
Probably, yeah. Unless we put something in between.
Yeah.
But at any rate, so you wanted to make money, is what you're saying. Is that why you got into real estate?
Yeah, it's kind of important to be able to live.
Pay your bills.
Shelter. Wanted to eventually get married and have a family.
Sure.
So, yeah, you need all that stuff.
So for me, that's the main reason I got into real estate investing as well. I mean, it was about the freedom and the
you were
flexibility.
in trucking, if memory serves, right? You were an attorney, then you got into the trucking industry.
I did.
Although you weren't actually a truck driver.
I mean, I would have done it if I had to, because I'm willing to do whatever I have to do to pay my bills. But fortunately, I wasn't.
I think you would have made a great truck driver, by the way.
You know what? I tried to convince my wife for a while that we should be over-the-road truck drivers where we were both doing it, because those guys make a lot of money. Like, you can make like $100,000 a year as a couple, and you don't need to own a house. You can live in your truck.
Yeah.
Right? So, and then if you buy your own
ultimate
truck,
house hack.
Yeah, I mean, it's the ultimate truck hack, really. But we're digressing really far on this episode. So I will say this. I haven't shared this on the show before, but my personal story was a bit more traumatic than that. So what happened to me is I was diagnosed with leukemia, and I ended up bankrupt because of that. I had to close my law firm down. I was a bankruptcy attorney, and I filed bankruptcy. I don't recommend that, by the way, but in my situation, it was essential. And then I took the job in transportation, and I was making okay money, and I did that job because even though I never wanted to be in corporate America like you, I wanted the flexibility of working for myself. I took that job because I needed the benefits, I needed to pay my bills, and it was a well-paying job, and so I was able to get some additional money. And then I started buying real estate because I thought to myself, I could die, right? This leukemia thing could kill me, and I need to make sure my wife's okay. So I really literally gone into real estate out of necessity because I said I need to produce income that's going to survive me. And it's kind of like you building buildings that survive you, right? It's about leaving a lasting legacy, and that's the reason I'm in real estate.
Yeah.
And that's actually why I do the show. It's why I do everything I do is to try to help people achieve the level of freedom that I've been able to accomplish.
That's a great thing. Yeah. So mine was somewhat accidental in that as a contractor for a lot of my life, I built houses for other people, but I wasn't really, the one taking all the risk. I wasn't the end investor that owned it and paid for the construction, bought it in the first place, et cetera, et cetera. And so when the market turned and I saw that light at the end of the tunnel, that was actually the train coming in my direction, not the sunshine. And so I was like, well, at the time, I'm like, I need to find something that's a little less cyclical. And, rental demand is constant and growing because of population demographics. And so it's like, okay. And at the time, my family and I were in Los Angeles, which is a little more expensive market than Chattanooga. And we were like, well, the math.
It's a little more expensive.
Just a touch, yeah.
So you moved to Chattanooga for real estate?
Yeah. So we first came to Chattanooga in 2008. Loved it. Bought a portfolio of properties that we talked about in a previous episode at the end of 2009, and after that, we'd start spending about a week here every summer with the idea that eventually we would relocate here, which we did at the end of 2012, and it pretty much took off from there. So we've done and accomplished a lot of things that I hadn't anticipated, such as owning a property management company, but love everything that we've done.
Cool.
Even if it was unexpected.
So I want to make sure we're bringing good value for this episode because people are saying, hey, how'd you get started in real estate? So let's talk about the nuts and bolts of how we got started. So like for me, what happened to me is as I told you, I filed bankruptcy and I didn't have any money. I didn't have any credit, obviously.
Getting a loan was probably hard.
Yeah. So I took a job and I worked really hard to make additional money, and I was able to save up about $20,000, which is a lot of money right after you file bankruptcy. It's a lot of money for almost everyone in the world. But I saved that money up and I used it to, this is of course 2011 when I was buying property, so the prices were really low. And we bought the best property we could with a partner, frankly. So we each put in, I think it was around 16 or 17,000 each to buy a condo, which we still own today and is worth a lot more than the $30,000 we paid for it. But once I did that, I was out of money, right? So I had to make a decision like, am I going to be okay with just $100 a month in income? Or do I want to make that transition to make sure that there's enough income to take care of my wife, if something happens to me? And so I was forced to get creative about it and look at some private money lending, some owner financing kind of deals, things like that. So that's sort of how I got started in real estate. And for you, you said you started out by buying this package of houses. How much of your money did you put into that deal? Tell me. Zero. Nice, I love it. Infinite return, the best kind. Well, unless you lose money, then it's an infinite loss. Cuts
both ways,
yeah,
right?
It does cut both ways. Yeah.
So, so at the time, I had a pretty vibrant construction business, which just got decimated in the downturn. And so I didn't have a lot of cash as a result of that at that time. And so
me neither at that time.
Yeah, and we found this package of single family houses, and it was at a good price, and basically found 3 other partners, 2 of whom put up all of the down payment money. We got essentially owner financing through a family trust that had held the paper on all of these, because you can't go and buy 20 homes or 19 homes all at once and get Fannie Mae financing on all of them. I mean, your limit's 10, and even then there are thresholds.
Right, and you might be able to get a portfolio loan or something like that, but you have to have experience
you could have
in
done
the
a
market.
commercial loan.
And
This was our first go at
it would have been really hard to get that loan.
Exactly. And so, but we got creative in our thinking and how we structured the whole deal, and we're selling out of the last remaining ones this year, and it's had its ups and downs, as a lot
So
of
do the
first
investors,
did.
the people that put up the cash, should they come out okay on that deal?
Yeah, everyone will profit.
Good.
Yeah.
Excellent. So, but I think the underlying theme there is for both of us is like, you're in a situation, and I think most people at some point in their life don't have a lot of money. Like, unless you're like, born into a rich family, you have to start out with essentially no money, and you have to figure out how to get the ball rolling.
So, another thing that I did at the time, as I mentioned, I have a lot of experience in construction. So I started, trying to flip some houses out here while I was still living on the West Coast. And so found a contractor that, seemed to be decent at his job, which is, that in itself is a win.
Well, I think it was a little bit easier then than it is
Yeah.
now. When the market's bad, those people are easier to find.
What I was doing is I would partner with somebody that had money in self-directed retirement accounts,
Sure.
Self-directed IRAs specifically. And so we would set up essentially a partnership agreement where there was a profit share based on who put in what, et cetera. And it was a good deal for them, in that like they were getting money back tax-free in their account at a pretty healthy rate. And, we, of course, had the opportunity to profit because we partnered with them in those instances.
Let's drill down on that just for a second. So were they lending you the money to buy these deals? Or
Yeah.
So it was just a straight lending. They didn't have equity in the deal.
Well, yes, they did that, too.
Okay, so they got some involved.
But it was structured as a note with a balloon on it. And then essentially we figured out, like, well, this is what we think we can sell it for. Mm-hmm. And so there'll be a profit share at the back end on the thing.
So the note was like, we're going to pay you a certain amount of interest and a chunk of the profit.
That's right. Yeah. That's right.
Okay.
And so, and
I like that structure, by the way. The thing about real estate in general is the more creative you are, the more successful you're going to be, because what happens is those folks that had money in their IRAs, they weren't active in real estate, and they needed to figure out a way to get as big a return as they can. And they could have loaned money to someone that paid them 6-7%, but what you offered them was more attractive than that, because they got that interest and then a chunk of the
That's
deal.
right.
And they weren't taking risk, right? Because they were going to get paid back no matter what.
Yeah.
But they got this sort of bonus equity piece on the back end, and that's that can be very attractive. And I've used that same strategy for several of my deals when I was starting out. We had one investor in particular that loaned us a significant amount of money at 6%. Interest only, but what we did is we gave them 1/3 of the equity in whatever we bought with that money. So we basically formed a company, right? Mm-hmm. And that company owned the property and also accepted a loan from that investor. And then we all owned it. There was 3 of us, the investor that put up most of the money, and then the other 2 of us. And we just, we each owned 1/3 of the company. Then we would all be responsible equally for paying back the loan if something had gone wrong. But as long as everything worked out, which it did, the property would pay for the loan, and then there'd be equity upside for all of us.
Mm-hmm. Yeah.
And it worked out really well. So that's kind of how I got started in real estate. It's how you got started in real estate. So the question is, like, how do you get started in real estate? Now, hopefully you already have a bunch of real estate, and that's an academic question. But if you don't have real estate, the piece of advice that I give all the time when I do speaking engagements and when people call me for coaching sessions is it doesn't actually matter how you do it. It matters that you do it.
Yeah.
Because once you do that first deal, the next deal's easier.
Yeah, and my belief has always been that finding the deal is the most important thing. Whether a lot of people will, and I speak from experience on this, having been a president of a real estate investors association and meeting all sorts of new investors and wannabes and stuff like that, where they're like, well, I just, I don't, it was always a reason where they couldn't. Find a reason why you can. That's the important thing. And if you find a good enough deal, you'll attract the capital, you'll attract whatever else you need. Now, maybe that means you got to give up some, but is it better to get something as opposed to nothing? I mean, I think we all know the answer.
And that mindset, by the way, find a reason why you can, is actually pretty much the rich dad philosophy, right? Where he says, don't say, I can't afford it. Say, how can I afford it, right? Like it's that change of mindset makes a huge difference in your life. And that's essentially what I say to people. It's like, your first deal is going to be both your worst deal and your best deal. Because it's probably going to have problems. Because all this stuff, and we just did an episode recently about things that can go wrong, and you should certainly watch that and understand what the risk points are. But at the end of the day, you're going to learn more by doing than any other strategy you have. And if you survive that first deal and you get to your second deal and your third deal and your fourth deal, pretty soon you're going to have a whole bunch of real estate and you're going to be richer because of it.
And be open in your thinking and be willing to adapt and learn new things and change.
That's right. And remember that a small piece of a deal is better than zero of a deal.
Right.
So if you can't put the deal together, but you can find someone that will put up all the money and give you 5% of the deal for putting up all the money, and that's the best opportunity you have, 5% is better than 0%.
That's right.
So anyway, I think everyone should invest in real estate. Our last episode, we said you shouldn't invest in real estate. And this one, we said you should.
Yeah, because mainly we have to keep the show going.
We're very consistent is what's going on. Have a great day.
Tune in next time. Thank you.